We've got the rand holding pretty steady against the dollar in early trade, certainly on its own path for now, not moving in tandem with the euro. Are you surprised at all with the kind of momentum we're seeing right now at this stage of the game?
Absolutely. I think what we've kind of seen over the last few sessions is a massive sell-off. The market was extremely long euros on the back of a weak dollar. We've seen the commodity price rally that we've seen across all the emerging markets. That has helped to bolster the emerging markets that are currency or commodity based, and the rand itself also saw the benefit of that. We have consequently seen a little bit of a sell-off. We were expecting a move to see some form of a sell-off and profit taking across the board, which resulted last week. The impetus still seems to be for potential upside in the gold price, potential upside in the oil price, potentially not as much as we saw previously, but certainly up another at least $5 or $10 on the oil price, and certainly some more upside potential in the gold. So that bodes well for the South African rand being a commodity-based emerging market. We've also seen continued inflows from foreigners investing in our bond market, which has also helped to support the rand and keep it below that 672 quite significant resistance level.
Just taking a look at things, because of course, as you've just touched on there, it's more than just the rand against the crosses to consider. We're seeing inflows into South Africa where there's been this demand in the bond market specifically. What are you making of the ability to see that kind of demand sustained?
I think we're going to see it sustained whilst we see developed nations, and we saw it last week with the ECB making statements that were a lot less hawkish than the market had anticipated. Thereafter, we saw the sell-off on the euro. You know, it looks as though the developed world is unlikely to start entering this interest rate hiking cycle that I think a lot of the market had anticipated towards the end of 2011, and potentially that's going to be pushed out a little bit further. And therefore, the South African market offers opportunity in terms of that yield carry opportunity. So, you know, for now we see the rand definitely have opportunity to look for sort of 650 level. That 655 has proved to be very significant on the downside. A break below that though opens up 630, 620 and potentially even below. So the opportunities for rand to remain strong are still intact, and I think as we come closer to the MPC decision on Thursday, we're going to see less hawkish statements, obviously with the rand remaining strong and the likes of the oil price coming off slightly. Those are the major headwinds that we face in terms of inflation. We still do, unfortunately, see consumers under pressure, you know, the private sector credit extensions remaining relatively benign. So those sort of things will come out at MPC, no doubt, and therefore I think that we're going to continue to see foreign investment looking for that yield enhancement opportunity.
Of course, when it comes to intervention from the South African Reserve Bank, we've had the forex numbers this morning suggest a very little activity from their end to combat the kind of rand strength we've seen over the recent past. The authorities a market report saying doing less to combat strength. What are you making of that activity, and are you seeing a heightening of that, bearing in mind that yes, we've got this strong rand to consider on the one hand, but the fact that it is acting as somewhat of a cushion to inflation on the other?
Look, I think you've got two sides of the equation. You've got the, the last couple of months we saw an average of about 1.2 billion being bought on a monthly basis, and that's deteriorated slightly to about 860 billion in the latest numbers. The other thing to consider as well is that the gold price has managed to strengthen. The euro against the rand has strengthened. So those bode well for our current account deficit. Just in terms of managing and certainly looking for a buffer as a South African market, it bodes well for investors in terms of the way that we manage our deficit, and that's continuing to provide that upside potential. So from that perspective, I think that they still are accumulating at these attractive levels in the rand, but nonetheless they certainly weren't as aggressive. But then they were quite clear about the fact that they weren't going to be as aggressive because the rand is one of the major buffers for our own inflation.
Of course, when it comes to inflation data, we've got China and the US anticipating numbers to filter through on their respective ends, and it's a topic that is center stage internationally. Even if commodity prices came off last week, that global inflation risk scenario still remains.
Yeah, there's a couple of risks in the system. I mean, the food prices still remain elevated. Unfortunately, oil prices are above that $100 a barrel, which is expensive by anybody's standards. So those kind of headwinds remain. In different regions, there are different other headwinds. Like in South Africa, we've got the administered prices, which is your electricity tariffs, your potential for toll roads, the likes of the wages that you were talking about earlier. These are the kind of headwinds that we definitely are going to face. But the question you need to ask yourself is an interest rate hike going to curb that? And unfortunately, all all it really does is put the pressure on the consumer, who ultimately does need to be able to have some form of free income that they can spend. So hopefully with oil prices coming off and the rand remaining slightly stronger, it frees up a little bit of cash and hopefully will help promote some form of growth within the local economy.
Brigid, let's hone in very specifically on the eurozone situation that's playing itself out. Of course, we've seen that euro movement coming through on rumours that Greece would soon need to restructure its debt. How are you reading that situation? Because we've had Ireland saying that if concessions are granted to Athens, then it should mean better terms for Dublin as well. And it's kind of this entire ripple effect that the market needs to start considering here.
I think that what you're seeing coming through right now is obviously the initial move on the euro was driven out of the interest rate outlook, and the currencies that you're seeing globally are being driven mainly by interest rates. So the ECB decision being a lot less hawkish was the main driver for the euro coming off from those 145 levels and beyond. Then I think, almost as close as 150, my mistake. And then, subsequent to that, we've obviously had these peripheral issues rear their heads again. The debt crisis remains in the eurozone, but the German economy is continuing to remain robust, as well as the likes of France and Italy. So, for now, I think there's some form of a meeting happening this week with Chancellor Merkel, talking about the outcome of the peripheral zones, what the impact is on the likes of Germany and the stronger states, and how they're going to combat that going forward. But I think overall, the eurozone remains a little bit more positive if you look at a global developed market perspective, certainly than the likes of the United States, who still run an enormous deficit.